what are some of the key trends that the delegates should leave the conference with? I think the overriding message is that the UK is currently in high demand, both from an operational point of view and also from an investor point of view. So we're seeing record levels of occupancy in the UK, both in regional locations as well as London. That's giving hoteliers an ability to drive rate, and therefore we're seeing pretty good growth on the bottom line, which is delivering strong investor returns. Moving forward, I think new supply is going to become more of a threat, and it will be interesting to see how some markets, particularly those like Belfast, which has a particularly high pipeline, will fare with the new supply that's due to come online. I think what is fair to say is when these markets that have a lot of new supply to come online have absorbed that, they will be left with a very high quality hotel offering, which then stands them in good stead moving into the future. Well, Edinburgh's the UK's second city after London. It's always been a strong performer in terms of hotel performance. Of course, a fully packed events calendar throughout the year, which drives leisure demand, but also some good corporate headquarters as well, which is good for midweek business demand. Looking forward, I mean, a lot of investment going into the airports in Edinburgh at the moment. They're talking about direct routes over to China. Knowing how much of a favourite Edinburgh is globally as a tourism destination, I think if we see further improvements to the airport, which makes Edinburgh ultimately more accessible, then tourism's going to really flourish over the coming years. So yes, I think a lot of supply to come into the Edinburgh market as well, but very positive signs coming out of that market still as we look forward. The UK is still very attractive. I think even despite the referendum vote and the way that went, the fundamentals of the market are very, very strong. It's probably fair to say that the UK is more mature in terms of its cyclical position than some of the markets in Southern Europe and Eastern Europe, where we now see a lot of the big private equity funds looking to deploy their capital just because those large double-digit returns are easier to come by. That doesn't mean that there isn't opportunity in the UK though, and we're seeing much more creative approaches to deal structuring and ways to drive the cash flow to ensure that those returns continue to grow in the UK. I think as we move into 2018, labour is obviously going to be a key factor, and it's one that's been mentioned throughout the conference today. Managing to keep or to build a workforce which can deliver the service that consumers expect is going to be challenging, particularly as we have falling immigration, rising emigration, and a very tight labour market. It will be interesting to see what the response of the big management companies and hotel operators is as we move forward to try and retain levels of talent. I mean, we've touched on pipeline already, and I think supply, in terms of the increases of supply, has been pretty low over the last few years, which has allowed hoteliers to really drive performance. We know that they're not going to have that same level of comfort moving forward because there's a lot more new hotel rooms to come online. So they're certainly going to have to work harder if they're going to see same levels of growth that we've seen in 2017. But there are some great concepts out there which we're going to see come to the fore, new hotel developments which will certainly add to the appeal of many destinations. So yeah, it will be interesting to see what balance we strike in the year ahead. So the transactional market in 2018 in the UK, buyers and sellers, that's an interesting question. I think the sellers, we will continue to see many of the private equity funds that bought earlier in the cycle start to crystallise their investments. We know there's a couple of big portfolios on the market at the moment, which is evidence of that. And in terms of the buyers, it's likely to be, given where we are in the cycle at the moment, longer term players. Those that are particularly strong asset managers can find opportunities to drive performance, probably through CapEx and creative deal structuring. I think it's fair to say that from what we've seen so far this year, yields aren't going to sharpen any further, so that creative approach really is going to be vital. It will be probably a year moving forward where the very strong operators and, as I mentioned, the asset managers really kind of earn their stripes, I think it's fair to say, if we're going to see returns on par with what we've seen in the last couple of years. In terms of who the buyers are going to be, I mentioned longer term holders. I think we still expect a lot of those to come out of Asia. Probably not China anymore, given the restrictions around outbound Chinese capital. That's been covered a lot in industry press of late. But what we are seeing is investors from other countries in Asia that previously have seen the Chinese and the aggressive nature of the Chinese in terms of acquisitions as something that they didn't necessarily want to compete with. Now we've seen that fall back in Chinese investment. Many more of them are coming to the fore and being much more active in terms of hotel investment, and we know they're very, very well capitalised and able to do deals. So I'm sure we can expect to see more funds from Singapore, Malaysia, Japan, even Korea.